This video is excerpted from my recent in-depth analysis that updates buy ratings, levels and valuations for the top tech stocks in my AI portfolio to ride the machine intelligence megatrend, the whole of which has first been made available to patrons who support my work. So, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month to gain access to my latest analysis on how to invest in high-risk tech stocks for 2021 and beyond. In fact, in a recent video, I showed how one can use their desktop PC to easily crypto mine in the background whilst one continues to use their computer with the likes of Nicehash that resolves and effectively be able to cover the monthly $3 Patreon fees for the next 5 years in just 1 month of crypto mining in the background, as demonstrated in my video. First, Amazon stock price soared into the stratosphere, and now so have Amazon earnings, doubling. Sales up 44%, and gone is Amazon's EC rating of 148. Gone too is the relatively pricey valuation of 91 of November 2020. And here we now stand barely 3 months on with Amazon priced on par with Google, trading on an EC of just 42. What does this mean? It means Amazon is cheap, and thus the buy percentage is high, 100%. Unfortunately, this means the odds are stacked against all those looking for lower prices. Of course, we could get lucky and the market panics and takes the likes of Amazon with it, but in technical and valuation terms, that seems very unlikely. Amazon has broken out of its converging triangle to the downside, which is bearish signal, which implies a down leg to below 28.71. However, all things considered, I expect this to be a false break lower, as the Amazon stock price is clearly consolidating ahead of the next big move, which, given the fundamentals, should be upwards. My existing relatively nearby buying level up is 29.60, which Amazon has come close to achieving, though just missing, which is a sign of strength. Therefore, the new buying level has been lifted to a level which is achievable, i.e. 30.50, which is where Amazon traded earlier this week. So, as I stated back in November 2020, I still don't see much downside for Amazon stock, especially given the fact that the fundamentals are caught up to the earlier stock price surge. So all those waiting and hoping for Amazon to revisit the low 2000s need to delete that expectation from their mindset, as likely in the not too distant future they'll be hoping for Amazon to revisit the low 3000s. And just as I stated when Amazon was trading below $2,000 in 2020, that I would not be surprised if Amazon trades to $3,000 before the end of the year. Similarly, now I would not be surprised if Amazon trades to over $4,000 a share during 2021. So, was I wrong to sell half my Amazon stock holdings in early September 2020? No, because Amazon is still trading well below the price I sold the stock at, and in British pound terms has moved a further 10% in my favour since. FX only matters when buying or selling. Whilst its overbought state as measured by the MACD no longer exists, and in the meantime Amazon's valuation has moved in the stock price's favour. So I did the right thing at the right time for the right reasons. The bottom line is Amazon is cheap, and I don't think it's going to get any cheaper anytime soon. And once more, the whole of this analysis was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month, including access to my latest analysis on how to invest in high risk tech stocks, as well as access to my forthcoming schedule of analysis. And do remember to subscribe to this YouTube channel for new videos as we protect ourselves from the central banksters' rampant money printing exponential inflation by riding the also exponential AI megatrend into the future.